10-year note Treasury yields continue to hold the range. Yes, that 170 to 190 range that we've held over the last several month and a half, and it seems to be very comfortably sitting right at the midpoint. Even though we had an FOMC meeting today, even though we have an ECB meeting and a UK election tomorrow, even though we've got a December 15th tariff announcement possibility coming up, we seem just continue to trade near that midpoint, making a few attempts to break out to the upside, but never really showing any conviction. And today we settle after FOMC at about 178, 180, and 10-year note yields were right dead set at the midpoint. I think the most important announcement that we're going to see this week is not ECB or UK elections, but it is obviously the December 15th tariff announcements. And we are just waiting for that. And I think after that, you could see things move around a bit in the bonds, because if it's going to go through, if they're going to take the tariffs off the table, I think yields will creep back higher. And if they're not going to take them off the table, at least not for the foreseeable future, yields will go back lower. But at this point, we keep hovering like a magnet at the midpoint. Market volatility, it's been high. It's been trending higher as we got to FOMC. After FOMC, things kind of got softer. Nothing really surprised came out of the meeting. And I think that although we do have that key December 15th line ahead, we are holding volatility elevated, but off those highs that we saw coming into FOMC. And what about what we have coming up later this week? Obviously, it becomes about, like I said, the ECB and the UK elections, but really it's the December 15th China trade deal. How will we get through that? The bond market right now seems very unaffected by the headline risks that we're seeing in the equities. You get good news, equities pop. You get bad news, equities sell off. We aren't seeing that knee-jerk reaction in the bond market. And the bond market's waiting for confirmation. Will it get it, and will it get it on the date it's supposed to? And that's going to be very key here. I think that positioning-wise, we saw yields get rally very strongly and then come sharply lower again back into the old range, because there is that uncertainty. And today's Fed announcement really didn't help any of that, because the Fed wants to talk about how great the economy is. They want to talk about how pleased they are with the equity markets, but they also want to stand ready to act if necessary. And right now they don't see any changes for the foreseeable future in policy, but again, they will do what's necessary. And that's reminiscent of what we heard Mr. Draghi say a few years ago. So I don't know if that's bullish or bearish to the Fed policy that we're seeing right now. But ultimately, a Fed that stands back and takes its hand out of the cookie jar is a good Fed. We are not seeing that quite yet. We're seeing the Fed getting ready to take a step back. By not cutting rates today, I think that's a step in the right direction. But can they hold themselves back for another quarter or so? I don't know if the GDP numbers, the growth numbers, the recession risk that we've all been hearing about, if that's going to get in the way. But at this point, it is smooth sailing ahead based on Fed expectations, forward guidance, and their dots, that they are at least aligned in that they're not going to be cutting rates anytime soon, nor raising them. And 10-year note yields right now will be trading more off what we find out over the weekend with the China trade deal. Obviously, like I said, anything positive sees yields creep back higher towards that 190 level. Anything not so positive sees us move back towards 170, with the real key being if we settle below 170, that's going to bring in some major buying. I don't know if we'll see major selling right away if we get to 190. We've been there many times before, and I think the market's going to want some kind of confirmation. If all is well and the deals go through and no tariffs, for how long will it last?